the bond market sets rates, not the Fed. That this silliness of watching the Fed and agonizing over what the Fed's going to do, looking at dot plots, listening, looking at what traders have priced in for cuts or hikes. None of that interests me. I think it's a giant waste of time. We spent all our time agonizing over what's the Fed going to do at this meeting? What's the Fed going to do at the next meeting? How many rate hikes are there? We're still doing that, right? Warsh doesn't want us doing that anymore. He wants you to, look at the data, look at analysis, do the analysis, and make your judgments not on us. That's why I forgot the term he used, but they're the referee, I guess is what he said. Don't look to us to determine where rates are going. Do your economic analysis, do your financial analysis, and look at where things are going. I believe we're going to see inflation trend down and rates trend down with it, such that you could be probably at 3%, certainly within 6 months. Could happen faster or slower, but
Warsh held at 3.6%, 9 to 3 dissents demanding a hike. And he says he has no tolerance for inflation. Does he hike in September? And what does that do to your parabola?
Yeah, so I don't try to predict month to month or meeting to meeting. I feel it's kind of a fool's game. I'm as I said before, I'm somebody who follows trends, and I've spent many years on X preaching that the bond market sets rates, not the Fed. That this silliness of watching the Fed and agonizing over what the Fed's going to do, looking at dot plots, listening, looking at what traders have priced in for cuts or hikes. None of that interests me. I think it's a giant waste of time. So it's been music to my ears that Warsh is trying to get away from that. Keep in mind, I cut my teeth. I had Arthur Burns as a Fed chairman when I first started. Then I had G. William Miller, who was a disaster in the late 70s under Carter. Then Volcker. And Volcker came in and basically said, the problem is we've been targeting rates now. And I lived this. I watched it, and I was a monetarist, so I knew he was doing it wrong. But Carter made the mistake. I mean, not Carter. G. William Miller made the mistake because rates were rising in an inflationary environment. He had hiked rates. He made the mistake of thinking he was tightening, but rates should have been going up a lot faster than he was actually printing money, so they wouldn't go up faster. He wanted to bring them up gradually. So money was going in the system at a rapid rate and pouring fuel on the fire of inflation. And that's why we got that. We went from, 5-6% inflation, all of a sudden we're at 7, 8, 9, 10, double digits. Volcker came in and said, I'm no longer targeting rates. I'm targeting money. We're gonna crank down the money supply, M1, and let rates go wherever they go. Because when you crank down the money, you're not printing money. You're not able to control rates. The bond market's going to take rates, and that's when bond vigilante became a new term. But frankly, that's what Warsh is coming in now saying is basically, I'm not here to target rates. I'm not here to think I know best what the right Fed fund rate is at any given point in time. We're going to let the bond market kind of tell us some of that. Now, the bond market spoke loudly the day after his meeting, but I think that was more of a tantrum than it was any kind of indication of where rates are going. Bond market doesn't like to be told what to do or doesn't like change. We've had this system under probably a little bit under Greenspan, but certainly under Greenspan, I guess, and under Bernanke, and very much so under Yellen and Powell, where it was, we spent all our time agonizing over what's the Fed going to do at this meeting? What's the Fed going to do at the next meeting? How many rate hikes are there? We're still doing that, right? Warsh doesn't want us doing that anymore. He wants you to, look at the data, look at analysis, do the analysis, and make your judgments not on us. That's why I forgot the term he used, but they're the referee, I guess is what he said. Don't look to us to determine where rates are going. Do your economic analysis, do your financial analysis, and look at where things are going. And that's why I believe what we're going to see. You've heard me say at the outset of this meeting, this interview, I believe we're going to see inflation trend down and rates trend down with it, such that you could be probably at 3%, certainly within 6 months. Could happen faster or slower, but you wouldn't get that from the dot plot. You wouldn't get that from most of the Fed rhetoric. You certainly wouldn't get it from Neil Kashkari, who I thought that was kind of an interesting one-upmanship or a little bit of a backstabbing for him to go on CNBC and talk his book about what rates are going to, what rates are doing or what we should do or how the Fed should be run. You have a new sheriff in town. Your boss is Kevin Warsh, and he's basically saying, I want my, not because he wants to control it. He just doesn't think it's good for what their job is. He doesn't want all these Fed speeches out there every other day. You look at it in the last 2 or 3 years, there was one Fed member or another, one FOMC member or another, or one Fed bank president or another out there talking about their view on interest rates. We didn't used to get that. And actually under Greenspan, he did a lot of double speak and Greenspan speak that was confusing because he didn't want you to really know what they were thinking. He was notorious for talking a lot but saying nothing because he was trying to keep it close to the vest. And I think Warsh learned from him some of that. So they didn't like his post-meeting presser, but I think it was a little bit of Greenspan. I'm not here to tip my hand on everything we're doing. He has said he's going to, he knows it's a collegial group. It's meant to be, kind of management by committee. So he's not going to be dictatorial about where things are going. And he's not a puppet of Trump. That's not what it's about either. He's really trying to get them to be more long-term focused and get away from this meeting to meeting thinking they are smart enough to tell everybody where rates should be. And he's also a supply sider where he's saying part of the conflict I think that the media has, because they've grown up on this Phillips curve idea that if the economy gets stronger, we have to tighten because that means inflation's coming. He's saying that's not true. If you have a supply side incentive to produce, to create supply, it doesn't lead to inflation. If you have enough capacity out there, inflation doesn't necessarily automatically have to go up when the economy is doing well. He's really, so that's why all these people wanting to know, he says he's going to get inflation down to 2%. They want it to happen in 2 or 3 months. That's not what he's talking about. He's talking about the trend towards 2% will be their mandate. That's what they want to do. But it's not about the next 2 or 3 months. It's about the next year.
Well, you answered kind of the first part of what I was going to ask, which is Warsh killed forward guidance, 2 decades of Fed handholding over. But maybe the follow-up to that, what happens to volatility when the Fed goes silent, like at the top of the bubble?
Yeah, I really don't think it matters all that much. It's, again, we're going to have that volatility no matter what. That's one of my struggles is I think Kevin Warsh is the most qualified person for the Fed chairmanship we've had maybe ever.
Yeah.
And that says a lot because Bernanke was qualified, certainly, having done his thesis on the Great Depression, et cetera. Greenspan was a master at certain parts of the Fed job. And Volcker, of course, is up there on Mount Rushmore in terms of a Fed chairman. And I loved Volcker. He was great, and he did the right things back then for sure. But I do think Warsh and his training is well suited for the job, well qualified, and is a bigger thinker than what we've had of late. He's going to change things over time. It's not something quick.
Powell is still on the board, a former chairman watching his successor. Does it matter, or is it just theater?
I think it's mostly theater. I think Powell hopefully behaves himself there. I think he will. I understand he's there probably most definitely because of the lawsuit. He's pretty much said, I'll leave when that thing's pulled away,
Right.
But I don't know what he's doing there really. And it's kind of awkward for him to be there. I was a defender of Powell through much of the last few years when a lot of people wanted to attack him and say, there were things I had trouble with that he was doing. And I think he was a bit political, but more or less what I have said for the last couple of years is all the criticism he got, when you step back and look, the Fed basically managed through a difficult period, brought inflation down without crashing the economy. How can you fault that? So they were more right than most of the critics in terms of that period. That being said, I think it would do him well to just step away. It feels a little bit political, and frankly, he's got a loyal group on that committee. And I feel sorry, and not feel sorry, but I do feel like Warsh has, he's got his work cut out for him a little bit because he's trying to change things, and you've got a Powell group in there basically more than you don't, and they're not. I think even though they're not speaking vocally about it, you can kind of read between the lines. At least some of them are not liking the fact that the game's changing. They don't like what he's. They want to be out there speaking. They want to give their opinions, and I think you see a little bit of that in the after effects of the presser, the after effects of that meeting. Like I said, I really thought what Kashkari did was kind of a, not very professional. It's like your boss is telling you he doesn't want to see this anymore. And yes, you're not on the, I don't know if he is on the FOMC or not, but he's a president. And yeah, you're entitled to have your opinions and all of that. That's fine. But to come on CNBC and kind of spout off about things that are kind of contrary to what Warsh is trying to do. I didn't see the need for that.